Good afternoon. George Cavaligos for HFT bonds. Boy, it's a tough trade here today. It's just grinding higher since the weird trade last night. Never really bounced. The Asian session sold the market off. We actually saw new lows in the 10-year. We had a bit of a divergence, and watch these all the time. These are always signals. As the 10-year was making new lows last night, the bonds did not. The bonds held the lows from yesterday. And immediately after that, when the London hedge fund boys came in, they started buying the bonds and notes, and it's been kind of a slow grind higher since then. And we're still just kind of sitting up at the highs. You guys know my theories about Fridays and how infrequently the market will reverse on a Friday. Once it gets its direction, it tends to go in that direction, and rarely do you see a reversal. The other thing is, if you look at the last 3 Fridays, they're all up days, and pretty significant up days too. So that's not a good thing, I guess. That points to that underlying, small speculative short. Those guys don't take the positions home over the weekend, by and large. They'll cover a lot of it, and that's why we just sit here bid like this on a Friday. Now I'm looking for the market to trade up. We're bumping up against some important resistance levels here. I just highlighted 132.06 and 145.29 as the fib retracements of the previous sell-off from yesterday, as the 618 retracements. I can't give you a good count right now. We're in some kind of choppy corrective pattern. Was yesterday sell-off an important trade? Yeah, but we're almost erasing it completely at this point. I do have a couple more minor resistance levels, 132.10 on the 10-year as we work our way back up here, and 146.06 on the bonds. I wouldn't be surprised if we continue in this fashion to see those levels Monday morning with the buyback trade. Again, is there a buyback Monday? Wow, it's a holiday, I forgot. I'm going to have to check that. I am not sure if there's a buyback on Monday. Let's do a real quick check while I'm chit-chatting away here. I'll open up the Fed website on the internet here and check it out. We do have a bit of an early close today. The Pitts close regular time. Globex closes at 3:15 Chicago time today. So don't think you're going to hang around till 4 o'clock and get a little bit more gravy out of this trade if there's anything going on. And then we open up the regular time Sunday night at 5 p.m. Chicago time, and we close early. I believe it's kind of an odd one. The equities close at like 10:30 Monday morning, and the bonds and notes and currencies close at noon on Friday morning, or Monday morning. Sorry, Monday morning. So that's kind of a different shift there. But the pits are also all closed on Monday, and the volumes are definitely going to be lighter than normal here. So it'll be, kind of a quiet day where I think the market will tend to continue this kind of slow grind higher trade. And we've got to keep a wary eye on those currency markets. Those are the things that are, causing these abrupt sell-offs in the treasuries, and that's what we want to keep an eye on, over the weekend. Always important to keep an eye on that. Yeah, no Fed on Monday, but I think the holiday will tend to keep the market bid. Next Fed comes in 22, 23, 24, 25. Let's take a quick peek actually at what they're buying. Tuesday is a tips purchase, small. Bonds on Wednesday, notes on Thursday, notes on Friday. So there's only one bond buyback, and then we got that tips buyback mixed in there. It might be kind of a light week for Fed buying next week. But again, there's no auctions until, I think there's a 10-year tips auction Thursday and next week. No big deal. And then the week after that, we have the 2s, 5s, and 7s. But again, with this debt ceiling stuff hanging over our heads, there's going to be an underlying bid here. I thought we'd see a little bit more of a sell-off. We'd test those, 618 retracement levels at, 20 plus, 131.20 plus on the 10-year and 145.22 on the bonds. We got down to 28 in the bonds, and we got down to 22 in the notes. We really didn't get all the way down to those 618 retracements, but you got to give the upside the benefit of the doubt now, unfortunately. It's a lot more fun when we're selling off. There's a lot more volume. There's a lot more activity. A lot more back and forth instead of this kind of stuff where you're just sitting there squeezing higher all day long, and you're trying to buy a dip, but it doesn't dip. And it's just, it's not a fun trade. It's a difficult trade. But that's it. It's Friday. I'm taking off. I'm going to go do some ice fishing, and I got a long drive ahead of me up to the cabin. You guys have a great weekend. I'll post some stuff Sunday night when I get back and see what's going on with the market Sunday night. Keep an eye on those currencies. If that yen really starts going down, which I don't think it will, Tuesday is the BOJ meeting where they're going to announce all these stimulus packages. I think you're going to see some short covering between now and then. I think that's going to tend to help the bond market do a little better too. So highlighted levels on the upside. Man, we just touched those 6 actually. We blew right through it on the 10-year, and we're hitting 145.29 on the bonds as I speak. So now we're looking at 132.10 and 146.09 as your next big fib retracement levels here. Otherwise, you're going to go back to the highs from what was it, Thursday night, and stops from the reversal day trade. It's not a lot of fun, but that's where we're headed, I guess. All right, guys, have a great weekend. I'll see you on Monday or Sunday night. Thanks.